Right now, there's a food crisis building that almost nobody on Wall Street is pricing in. And by the time you finish watching this, you'll understand exactly why. A ceasefire hit the wires. Oil crashed 13% in a single day, one of the biggest drops in 5 years. Stocks bounced. The financial media said the crisis was over, and nearly every investor moved on. Brent Johnson of Santiago Capital didn't move on. He saw something most people missed. Because while everyone was celebrating cheaper oil, something invisible was happening beneath the soil of farms from Iowa to India. The Strait of Hormuz is still not fully open. A few ships are trickling through. That's not a reopening. The fertilizer that needed a ship 6 weeks ago never left port. And here's the part that matters most. You can't unmiss a planting season. That window closes on a biological clock. No ceasefire changes biology. What Brent has mapped out, and what I'm about to walk you through, is the gap between the energy shock markets already priced in and the food crisis they haven't even begun to think about. You'll see how the transmission works, which commodities and stocks sit directly in the path. And there's one part of this story that could catch the entire market off guard this fall. But first, you need to see the machine. Here's how the machine works, and once you see this, you can't unsee it. Imagine a row of dominoes, but these dominoes are months apart. That's what makes them so dangerous. The first domino falls and everyone watches. The fifth domino falls, and nobody connects it back to the first. Domino 1, energy prices spike. That already happened. Oil, natural gas, shipping rates, all of it. Domino 2, energy prices slam into fertilizer costs. Fertilizer is made from natural gas. Think about that for a second. The Persian Gulf supplies roughly 30 to 35% of global urea exports and 20 to 30% of ammonia exports. Iran's ammonia plants are still shut down right now. Qatar's biggest complex declared force majeure. That's a legal term that means they told the world, we cannot deliver, period. Domino 3, farmers can't get fertilizer, or they can't afford it. So they plant less, or they plant without enough nutrients in the soil. Domino 4, crop yields drop 6 to 9 months later. Domino 5, food prices climb 9 to 12 months out. Domino 6, grocery bills jump, governments panic, and in some countries, people go hungry. Now here's what Brent Johnson keeps pointing out, and it's the thing that makes this so easy to miss. The market is staring at Domino 1 lying flat on the table and telling itself the chain is broken. It's not broken, it's just slow. And the slowness is what makes it profitable for anyone paying attention. Because the numbers behind this are even worse than the pattern suggests. Let me show you. Let the numbers settle into your mind for a moment, because these are the ones that change the picture completely. The World Bank confirmed urea prices jumped 46% in a single month from the Hormuz disruption alone. War risk insurance premiums for ships crossing the strait surged 4 to 6 times their normal level. And here's something most people don't realize. A ceasefire announcement doesn't reset insurance premiums. Insurers price risk based on what happened, not what politicians promise. They don't work on hope. Now here's the number Brent Johnson flagged that should genuinely keep you up at night. The 2007 to 2008 food crisis was triggered by disruptions that were substantially smaller than what's unfolding right now. During that crisis, rice went up roughly 180%. Wheat went up roughly 130%. That crisis destabilized 48 countries, and it started from a lower price baseline than where we sit today. Read that again in your mind. Lower baseline, bigger disruption. This time, 3 critical nutrients, nitrogen, phosphate, and sulfur, are all disrupted at the same time. That has never happened before in the modern era. Never. And yet, wheat futures have barely moved since the conflict began. They ran up, pulled back, and are sitting almost exactly where they started. That's not the market telling you everything is fine. That's the market telling you it hasn't noticed yet. There's a difference, and that difference is where the opportunity lives. So what does this actually mean for your money? That's where this gets very specific. Now I want you to picture something. Imagine you could see 6 months into the future. Imagine you could watch a slow-moving wave approach the shore while everyone else is still sunbathing. That's what Brent Johnson has laid out in his research, and here's how it translates into real positions. Wheat futures are the purest play on this food crisis. You want to go out to at least the December 2026 contract. That's when the yield shortfall from missed planting windows starts showing up in actual supply data, the real numbers. For defined risk, call spreads on wheat give you exposure with a known maximum downside. You know exactly what you can lose before you enter. If you don't trade futures, wheat ETFs work, but understand they carry roll costs on longer holds. That eats into returns over time. Now, fertilizer stocks. This is the equity version of the same thesis. CF Industries, Nutrien, Mosaic, these are the primary names. And here's what stopped me cold when I read Brent's analysis. Mosaic is actually trading lower than when the hostilities started. Nutrien is basically flat. Think about what that means. These companies are about to become the last standing suppliers in a market that just lost a third of its urea and a quarter of its ammonia. The shelf is emptying and the stock price hasn't moved. Under the base case, Brent sees 20 to 30% returns as realistic. And if this becomes a genuine shortage, it could be meaningfully more than that. Now close your eyes for just a second. Picture a kitchen table in suburban Ohio, a family opening their grocery bill next January. The sticker shock from this crisis hasn't arrived at that table yet, but the cause is already locked in the ground. The question isn't whether the shock comes, it's how big. And that depends on which of two roads we take from here. There are exactly two scenarios from here, and you need to see both clearly before you decide what to do. In the first scenario, diplomacy holds. The strait reopens fully. Fertilizer ships start moving within weeks. The planting season gets a partial rescue. Not a full rescue, but enough. In that world, the food shock is real but manageable. Wheat runs 15 to 25%. Fertilizer producers have a strong year. Grocery prices rise, but they don't destabilize anything. That's the good road. Now here's the second road. And this is the one Brent Johnson says most investors are completely ignoring. The ceasefire phrase. Ships stay cautious. Insurance premiums stay elevated. The planting window closes completely across the northern hemisphere. And by fall 2026, the world realizes that the food it was counting on simply wasn't planted. It doesn't exist. In that world, you're looking at 2008 level price spikes starting from a higher baseline. Across wheat, rice, corn, and soft commodities like sugar and coffee. Neither path is certain, but notice something. Both paths reward being positioned before the market prices the agricultural lag. Both of them. The risk of being early is small. The risk of being late is enormous. And there's a very specific signal that will tell you which road we're on. That's what we need to cover last. Let me bring this full circle so the picture is clear in your mind. The ceasefire calmed the energy market. It did nothing for the food supply chain that was already broken beneath the surface. The fertilizer shortage is baked into the soil right now. planting windows or closing on a biological clock that doesn't negotiate with diplomats. Wheat futures, fertilizer stocks, and agricultural commodities are the cleanest ways to position before the rest of the market catches up to what you now understand. The signal to watch is the FAO Food Price Index. When that index starts moving, the trade is already late. You want to be positioned before that number turns, not after. This is the kind of research that changes how you think about where your money sits. Brent Johnson's full analysis, the specific trades, the timelines, the data the market is missing, all of it lives at Santiago Capital Research. The link is in the description below. You've already done the hard part. You watched this. You saw the machine. You understand how the dominoes fall. The only question left is what you do with what you now know. And I think, if you're being honest with yourself, you already know the answer to that. Subscribe today. Sign up at Santiago Capital Research on Substack to stay informed. Link is in the description.